Ken, when you look at oil prices, I mean, oil's up over 20% so far year to date, whether we're talking about WTI or Brent. At some point, high oil prices will negatively impact the economy, and the stock market will throw a fit and start to sell off. My guess is when you're at $85 and $89 a barrel, we're probably not too far from that point. I would think anything above $90 a barrel becomes a big challenge for the market. Ken, I'd love to hear your take on that.
Yeah, Mark, obviously, you hit it right in the head. I mean, gas prices are going up. Again, it was one thing to say crude, but it's translating to higher gas prices, and consumers pull back. So, whoa, wait a second. We're back where we were a couple of years ago. Again, we know the start of this is that we were energy independent, and then, upon a new president, 14 minutes later, we're energy dependent. And this started pretty much, if you think about it, in the summertime, low $70 a barrel, and the Saudis came to the table, and what do? They cut rates. They'll get a little bounce again, and they cut rates again. They cut supplies. And so that's what you see, this kind of gamemanship around this, cutting supplies, cutting supplies, cutting supplies. You get a little lift in demand, and here we are, to your point, Mark, $85 to $88 a barrel is going to translate to higher gas prices and can potentially, kind of weaken the consumer confidence, which we've seen actually. Consumer confidence has been going up the last couple of quarters. You may see that receding as people start seeing a bigger bite of the wallet is now going for gas prices.
Yeah, it's a great point. You look at oil and you say, well, does $85 a barrel, is that attributed to the fact that there's more demand, a growing global economy, or is this ultimately going to be a negative because it's going to cut into individuals and businesses' disposable income? So it certainly can be a big negative, but you wonder why. Why is it supply issues? Why are we seeing this rally in oil this morning, up 2% on crude at now 85.40?
Right. So again, I mentioned you got supply cuts. You're seeing some demand go up a little bit, but it's mostly supply side that we see. And that's why we're seeing the higher oil prices. And remember, we're fighting two wars here. There's so much that's going on at the moment. It's hard to even put all this stuff together. But at the end of the day, I think you're right. What's more important for the average consumer here in the U.S., you're starting to see the pumps at $3.70 a gallon, $4 a gallon. That $4 is a psychological point I've seen over the years.
Sure is.
Where consumers say, no, we're going to pull back on that restaurant tonight, or we're going to pull back on this when they see $4 when they pull up to the gas pump.